Welcome friends back to this market wrap with Raja, and we have been seeing that the entire move which has been witnessed on the Nifty has not been to one's liking. Well, attempt was made to trade above the breakout zone above 11,000, but consistent supply around these region have actually made it very difficult. Now, with the market continuing to face the pressure, it has become very difficult for the bullish bias to reinstate itself. So, what has really happened is, especially with the result season undergoing right now, there has been mixed response, and the results which have come out so far, well, Reliance did surprise the street, and so did Wipro. But then ITC came out with some negative results, and that has actually impacted the overall market sentiment. Now, with the overall news flow being mixed, and the way people are perceiving the current state of affairs in the light of the election year, it has become a very dicey market situation. So, how do we proceed in this market, and what is the kind of outlook to maintain is what I'm going to be sharing this week. Well, what we discussed last time and what we have this time is not too different, but yes, there is a slight shift in the bias. So let's take a look at that. Now, if you come down to the monthly chart, which I have on the screen right now, you can see that the entire range which I had highlighted to you, which is around 11,000 to 10,700, still continues to be a point of contention. And unless and until Nifty trades below 10,700, one should not get overly pessimistic. However, one needs to understand that this range is going to give you a clue on either side of the trend. And when that is going to be the focus, one should consider this range, or one should rather attribute a lot of importance to this range which you are seeing right now. And the move below 10,700 could take the Nifty right down to 10,500, or a break above 11,000 could take Nifty to 11,200. So we are standing at a critical juncture, or rather trading in a critical zone between 11,000 and 10,700, and it definitely augurs us to adopt a more stock specific approach. So now if you go down from the weekly chart of Nifty to the daily chart of Nifty, you can see that the ascending triangle which I had highlighted last time, for those who have not seen the ascending triangle formation, can refer the last week's video. You can see here that this ascending triangle has failed, and now you can see that this trend line is now broken. And again, the point number one which I highlighted is the gap region. This gap region is causing a problem yet again, and now with the last 2 days Nifty turning a little iffy, you can see that the trend line has been broken, and now the momentum indicator, which was looking to lift the spirits of the market, has again given up, taking the Nifty lower. So now the 10,700 is at threat. We were actually looking at 11,000 to be broken, but now it looks like the 10,700 is under threat. And with that being the scenario, let's take a look at what kind of support Nifty is going to derive if so be. So for that, I again use my Bank Nifty chart, and I find that the doji formation indicated some exhaustion. It didn't manage to take up the trend higher. So right now, what you are seeing on the charts is the 27,000 level, which is actually struggling to hold on. After seeing 3 weeks, this is a weekly chart of Bank Nifty. You can see here, after posting 3 doji formation, the negative formation or the long body negative candlestick, a decent size negative candle has been formed for the current week, and all this definitely indicates that there is going to be some selling pressure emerging in the forthcoming week. And once you take a look at the momentum, you can see that the momentum is also beginning to slacken. And all this in conjunction suggests that if 27,000 is going to be broken, you could see a swift decline. So we are looking at the coming week with some bit of uncertainty, and what we should be considering is some bit of selling pressure to emerge on the indices, and that could have a cascading effect on the stocks as well. But well, stocks are in the midst of the result season, and the result season will continue to play an important role in triggering some stock specific moves. So one should not get overly pessimistic as of now. The key levels to watch out for on the Nifty is 10,700. The key level to watch out for on Bank Nifty on an EOD basis is 27,000. And so those are the two indices which are under pressure. The index which is actually doing much better than expected is the Nifty IT. The Nifty IT, if you take a look, I had shared with you last time that IT stocks would look to do well, and it has been the situation which we saw in the last week where IT stocks did manage to do well, and even now you can see that post the trend line breakout which we saw last week, the Nifty IT continues to hold the fort and it is trading higher. Another point on this is on the currency. I'll be sharing a video on the currency where you could take a look at how the currency is placed. But just to give a clue, that currency is now looking to inch higher. So one should actually be looking at some bit of weakening to emerge. So that's my take on the currency. I will share with you in the other video. But then impact of the currency on the IT could be much more in line. So one should look to watch out for some stock specific action from the IT space, and that's my recommendation on the IT index. So coming back to the index analysis, you can see that this is the kind of detailed level of work which we do at Chart Advice, be it the Nifty, be it the Bank Nifty, or be it the Nifty IT. What is important at the core of all this is detailed analysis. And I am fortunate, and my team is fortunate, to be guided by our founder, Dr. Narayan, who has been at the pinnacle of teaching, who has been at the pinnacle of taking the entire concept of advisory forward. And there can be no better organization than Chart Advice to give you the value which it has been doing. And if you can see our videos, you can see there is a lot of value being disseminated out there. And why are we doing all this? We are doing this so that the end audience becomes more educated and becomes more aware of how to approach the market. The key is on how to approach. Well, you can have the map, but if you don't know how to navigate it, then may God be with you. So that's what the whole situation is in the market. You are having a lot of information, but is anyone able to decipher it in the right manner and give it to you? Well, that's what we do at Chart Advice. So for more details about our training, more details about our advisory services, or more detail about our fund management, be it any vertical, you will get it from Chart Advice, and I have shared it in the description below. You can take a look at those details and you can get back to our office. And don't forget to subscribe to our channel, because lot of interesting videos, podcasts, and interesting kind of information is going to be disseminated. So don't miss out on those. Thank you for watching.